Hello, welcome and welcome back to my channel. Today, this video is going to be all about investing, especially if you are a beginner. I'm going to be explaining what exactly investing is, what can you invest in, how much you should be investing, and how do you actually start in the first place. And at the end of the video, I'm going to be sharing with you what I plan on investing in over the next year. So make sure you stick around for that. My name is Veronia, and if you are new here, I talk about all things to do with money, your career, and having a positive mindset for success. So if you are interested in that content, then be sure to subscribe and hit the bell notification below. So obviously a lot of financial experts talk about investing, but I really wanted to dial back and explain what investing actually is. Because if you're only starting to work on your finances, it can be really hard sometimes to understand some of the terms that people are using. And to be honest, when I first started learning about investing, it just seemed to be a lot of mumbo jumbo and it almost put me off. So I thought I would begin with the basics. So when you start investing, you are basically allocating money into something with the expectation of getting a return, profit, or benefit in the future. So basically, if I am investing in something, I am expecting to have some form of return back. And usually that would be more money. So now that we know what investing is, why do we need it? Why is it important? Why do people keep talking about it? A lot of people will say that investing is the key to building wealth and becoming financially free, and I couldn't agree more. If you are looking to become financially independent or you are looking to retire, then you would probably want to start investing. This is especially important if you don't want to be dependent on the government by the time you retire. And I definitely don't. Investing is also important because it does tend to beat inflation as well. But what is inflation? So I'm first going to look at the definition from Investopedia. And if it does still sound like a whole load of mumbo jumbo, you are not wrong. But I am going to try my best and make it more simple for you. So Investopedia says, inflation is a quantitative measure of the rate of which the average price level of a basket of selected goods and services in the economy increases over some period of time. It is the rise in the general level of prices where a unit of currency effectively buys less than it did in prior periods. Often expressed as a percentage, inflation thus indicates a decrease in purchasing power of a nation's currency. So how I explain it is a lot more simple, but remember, I am not a financial advisor at all. So if I don't use the correct terms, please don't shoot me. So when it talks about goods and services increasing over a period of time, I like to use examples. And today's example is going to be good old Freddo. So in the late 90s, if you went to the corner shop, you may have come across Freddo, which was a chocolate bar that everyone loved. And in those times, you could probably get a Freddo for about 10p. Now fast forward to 2020 and it's at least 25p and even 30p in some places. So if you took that same 10p and went to the corner shop to buy a Freddo bar, you would probably have some strange looks. And that is essentially inflation. Inflation is basically just a general rise in prices, but whilst prices are increasing, the purchasing value of money will fall as well. So what 10p meant 10 years ago is not going to be the same as today. Now, before you start to think, what has this got to do with investments? The reason why it's important is because investments usually tend to keep in line with inflation, and sometimes they will actually beat it. And that is why you will see a lot of people investing rather than saving their money, because when you are saving money, especially if you are saving it in a bank, the interest can be minimal. So for example, if your bank is only offering you 1%, but at the same time inflation might be 2 or 3%. In real terms, you would be losing money if you actually kept that money in a bank account. Whereas if you are investing, you could potentially be getting a return a lot higher than that 2%, which then means you would be beating inflation. So what can you actually invest in? Now, there are different asset classes that the majority of people will invest in, but one of the things you could actually do is invest in yourself. So this might include choosing to invest in your own business, or it might be investing in your health or your education. And to be honest, I think this is one of the most important things you can do, because you don't want to just chuck money blindly at something and think that it's a great investment opportunity and then you end up losing money. So investing in your financial education is essential, but it doesn't even have to cost a lot of money. There are so many free resources online, so many different YouTube channels, and there are so many books online that you can literally just buy for a few pounds. So even if you can't actually afford to invest in anything now, if you have access to the internet, which I assume you do since you're watching this video, then nothing is stopping you from investing in your education. There are also courses that you might want to invest in, but I would say just make sure you do a lot of research, make sure you look at reviews, because there are some courses that just aren't worth the money. The second thing you could potentially invest in is property. Now, I would say this is quite a popular asset class, especially in the UK. And I think people really like to invest in property because it's tangible. You can see it, touch it, feel it, and most people already live in a property. So this is something that would be really familiar with the majority of the population. But even when you're talking about property, there are so many different things that you can go into. You could invest in residential properties, commercial properties, or even land. But if you're a total beginner, I think most people tend to start with residential properties first and then work their way up. When I talk about residential properties, what I mean is that essentially you are buying a property to basically rent out to other people. And there are two main things that you can benefit from if you do have an investment property. The first one is basically getting passive income from rent, because when people pay you rent every month, that rent should cover your expenses and you would hopefully get a bit of profit on top. And the second is from capital growth. So if your property actually increased in value and you ended up selling it, you could potentially make some capital gains. As an example, if I bought an investment property for 100,000 and 10 years later the property increased to 300,000, that 200,000 would be the capital growth which I would be able to gain if I sold the property. Obviously not accounting for fees and taxes. So the next thing you could invest in is the stock market. And if you tend to watch business news, they seem to talk about this a lot. So this is where you might have the opportunity to buy, sell and trade your stocks, which are basically shares of ownership in public companies. So investing in stocks basically means you would buy a small portion of that company. And the more stocks you're able to buy, the bigger the ownership of that company. Now, the good thing about investing in stocks is that you don't actually have to work for the company. You don't have to become a manager or attend company meetings. You don't really have to do anything at all. However, if the company is just really bad and it ends up becoming bankrupt, you can't really do anything about that either. But if you do your research and you pick great companies, then investing in the stock market could be a great opportunity. You also don't have to individually pick the stocks as well. You could get a professional to manage and pick the stocks for you, or you could just track the market. And like property, there are two potential ways that you can make money. The first one is the use of dividends. And basically what this means is companies will pay the investor for simply investing in their stock. It's kind of like the company giving you money just to say thank you for investing with them. But not all companies pay a dividend, and a lot of companies that do have actually scrapped it for this year because of the pandemic. But the second way you could potentially make money is similar to property in terms of capital appreciation. So basically you could buy a stock for £10 and then you might find that the value has increased to £20, and if you sold that stock you would be making a £10 profit, which is basically the capital appreciation. But just remember, the value could increase as well as decrease, so you could also lose money as well. So the next thing you could also invest in are commodities, so things like gold and silver. And these tend to have value because you can't actually print them like you can print money, for example. And some people might use this to protect themselves from any economic disasters like a market crash or a recession. There is also a new commodity in town called cryptocurrency, which you may have previously heard of. And this is basically intended to be a global currency that are actually run by normal people without any forms of government intervention whatsoever. At the moment you can't really use it like paper money, mainly because it isn't actually regulated by most world governments. But I do think cryptocurrencies like Bitcoin are quite interesting, although I haven't really done too much research about it. But if that is something that you are thinking of investing in, then just make sure you do your due diligence and do your research as well. So now that you have an idea about what you might want to invest in, the other question is, how much should you be investing in the first place? To be honest, there's not really a straight answer, but all I would say is just as much as you can. But what I would say is that if you are thinking of investing, it should really be a long-term strategy. So the money that you'll be using should be disposable income, which basically means even if you lost money, it wouldn't really make a big impact on your financial situation. And as I mentioned in my previous video, investing has risks. Even though you could potentially make a lot of money in investing, you could also lose money as well. But that shouldn't stop you from investing. You just need to identify what your risk tolerance is and how much of your income you are willing to actually take that risk on. Now, it's great that we have all that information, but how do you actually start? Now, before you think about throwing your money into the stock market, you need to have your goals set first, because then you'll understand what asset class might actually be best for you. Just remember that investing should be seen as long term. So as an example, your goal might be to retire in the next 20 years. So once you've got that goal, then you will need to figure out how much you're going to need when you're retired and how you can actually get there. And hopefully that will help you decide which asset class you might want to invest in. And when you've actually decided, I would really encourage you to read and learn as much as you can. Because even when you've chosen that asset class, there are so many different things that you would need to think about. So as an example, if you decide to invest in property, you will need to decide what kind. Will it be a simple buy to let, or a HMO, or commercial? And even with stocks, do you want to be an active or passive investor? Would you want to invest in individual stocks, or would you prefer to invest in funds? Of course, I will be doing more videos on investing, so hopefully I will help with that. But there are also a lot of resources online as well. Now, in one of my previous videos, I got some of you to guess what I was actually going to be investing in over the next year. So I thought I would update you in this video. There are two things that I am going to be investing in. So the first one is stocks, which obviously a lot of people invest in. And the second is a buy to let investment property. So hopefully in future videos, I will be sharing my journey on that as well. If you did like this video, then remember to give it a thumbs up. Once again, I post every Friday, so if you haven't already, then please do subscribe to my channel, and I will see you next Friday.